All right, sorry about that, guys. How's everyone doing tonight? Welcome back to another Dividend Happy Hour. Hope everyone had a great week. Happy Friday. And I hope you guys are ready for a fun live stream. We have a lot going on. A lot going on tonight, guys. We're going to be talking about a good handful of stocks. Sorry, I'm just getting situated down here. We're going to be talking about a handful of stocks today, guys. It was a pretty eventful week on the stock market. Some good, some bad, mostly good, definitely more good than bad. And the news that we're talking about pertains to 5 stocks in particular. And if you saw the thumbnail of this video, you'll know which stocks those are. And so we are going to be running through the news surrounding all 5 of those stocks. We're talking about Johnson & Johnson, Starbucks, 3M, STOR Capital, and what's the last one? There's one more that I'm missing. I don't quite remember what it is off the top of my head, but we're going to talk about it too. And then after that, I'm going to go through a little portfolio update with you guys and show you what's been going on in my neck of the woods this week. And then after that, we're going to do the usual Q&A hangout session. But before we get into all of that, guys, quick cheers to all of you. Here's to another successful week. We made it through, guys, and we have arrived at the weekend. Thank goodness. So cheers to that. And, you know, guys, before we get into the main topic, I always like to share your guys' accomplishments, your guys' milestones that you guys are reaching in your portfolio. And I have a really special one to share tonight. This one, I'll put it up on the screen right now. This is from Kevin Burgess, who is probably in the stream right now. But for those of you who don't know, Kevin is a creator here on YouTube. And he's coming up on 1,000 subscribers really quick, guys. So you got to check out his channel. I've included a link to his channel in the description of this video. Check it out. But this is a screenshot that Kevin shared in the Discord group recently, I think yesterday, showing just some of the dividend income he received like in one day, or maybe it was just this week. But as you guys can see, just in 1 week, just in one day, however, you know, whatever timeline all of this came in, Kevin, who's been a dividend investor for decades now, brought in like over $1,000. I think it amounted to almost $1,300 with all of these payments in aggregate. So we've got about $200 from Main Street Capital Corporation. We've got $360 from Prudential Financial, ticker symbol PRU. We've got $536 from Whirlpool, and then another $175 from Whirlpool. So Kevin is just crushing it, guys, and more than anything, I mean, this is impressive in its own right, but the main reason I wanted to share this is because I think this is a huge testament to this style of investing, and this is proof of concept. Kevin is retired and in some capacity living off of his dividend income and continuing to grow his portfolio at a crazy rate. It's pretty unreal. Like, seriously, check out his channel. He goes over this, you know, in every single video he shows his portfolio. It's so cool to see someone with this big of a portfolio bring in this much income. It's certainly motivating, but like I was saying, it just is proof of concept, and it's a huge testament to what's possible with this style of investing. And we always say it, guys, and it goes without saying at this point, but it doesn't happen overnight. I think I mentioned this already, but Kevin's someone who's been investing for decades now at this point. And, you know, this is what happens when you stick with something for a long period of time and you stay disciplined and you stay consistent, like, especially for those of you who maybe feel like your portfolio is not growing fast enough, or maybe the dividend payments just coming in don't seem worth it. $1 here, $2 here, $5 there. Guys, if you just stick with it at some point, that's what it's going to turn into. Okay, it's going to turn into a $194 payment, a $360 payment, a $536 payment. This is just what's possible with dividend investing. And like I said, it doesn't happen overnight, but it can happen. And it will happen. It's really not a matter of if, it is so much a matter of when. But the only catch, the only requisite is that you stay here. Let me bring this down a little bit. Is that you stay consistent and you stay disciplined and you just keep going. You can't give up. So Kevin, thank you so much for sharing that. Number one, with the community, and number two, thank you for letting me share that with everyone here on this live stream. I really appreciate it. And I'm sorry, guys, I don't have the comments turned on. I'm not looking at the comments quite yet. I'm going to switch over real quick and go through some of these comments. And with that, actually, guys, I want to know kind kind of semi-related. I want to know, what did you guys buy on the stock market this week? We know Kevin had some good dividend payments coming in from those companies, but what did everyone buy? I know it's kind of a little different question, but I'm curious to know, what did you guys buy this week? I'll tell you guys what I picked up in my portfolio later on in the stream, but I want to hear from you guys first. So, let's see some of those answers. I'll throw them up on the screen here in just a moment, and then we'll get into the main topic because we do have a lot to cover today. I also have some really exciting news, and I'm excited to share that, but I'll get into that later in the video. So let's see here. Okay. And real quick too, as you guys are submitting those answers, just a quick shout out to all of you guys. I see Shamir's here. I see Suzuki Man's here. Mountain High is here. Anthony's here. Harris is here. Coyote Sunglasses is here. Coyote, I haven't seen you for a few streams, I feel like, man. Good to have you in here. We got Dennis. We've got Kevin is in here. We have Billy. We've got Lucas. We got the legendary J-Man. We've got Dev, Madrid, Billy. I already said Billy. Billy gets an extra shout out. We got Jason. What's going on, Jason? Happy Friday. Kevin Wagner. We've got Captain Suburbia, the legendary. We've got Caleb. We've got Chris, Craig, Jake from State Farm, Cass, Dividend Growth Income. We've got Johnny, Aaron, Wallet Invest. Guys, thank you all so much for being here tonight. It's a pleasure to have you all joining me for another Dividend Happy Hour. I'm going to go through and pull up your guys' purchases here in just a sec. I honestly was in such a rush, guys. I took my car to get it serviced today, and I had to go. It was there like all day. I had to go pick it up. And I got back just in the nick of time to get my, presentation together that we're going to be going through. I finished that seriously within 60 seconds of starting the stream. And so what I want to do real quick as you guys are submitting those answers is I want to pull up my notes on the screen just so I know what we're following here. I usually have them pulled up on my iPad, but give me just a moment. I'm sorry, guys. Okay, here it is. Just so I don't lose track. You guys know me. Once if I just am let loose, I just start rambling, and that's something that nobody should have to witness. So, okay, got it pulled up. Let me see. So we got Kevin picked up some Zim this week. Okay, I talked about Zim in Wednesday's video. Not my cup of tea, but definitely a high yield. We've got Cass picked up some Intel. I picked up. Oh, I don't want to spoil it. Cass, you almost made me do it. Cass also picked up some O. Wallet Invest got a Realty Income dividend today. Shamir picked up some sort of Vanguard ETF. Christian, it looks like he had a really good day of purchases. Bought some Apple, some Costco, Microsoft, Realty Income, Procter. Dang, man, Christian, look at you, man. Huge shopping spree. Rex also had a good week of purchases. Jeppy, Realty Income, Medical Properties Trusts, and Store Capital. Nice, man. We're going to talk about Store Capital in just a moment. Let's see here. Who else? J-Man picked up some T-Row, it looks like. Suzuki Man added some Johnson & Johnson and Pepsi. Good pickups for sure. Aaron, can't go wrong with these for sure. You got SCHD. Love some SCHD. And some Adobe for his growth portfolio. As you guys know, I'm not a growth investor at all, but I really do love Adobe. If I was a growth investor, I probably would have Adobe in my portfolio. I probably would have Spotify. I definitely would have Google. Those are probably three growth stocks that I would love to support. Dennis here picked up some SCHD, some Ally, Intel, and Lowe's. Good pickups, man. Harris picked up some Coca-Cola, some Procter & Gamble, some Realty Income, Microsoft, and Intel to average down. Yeah, man, you can say that again. I think my Intel position, guys, is down nearly 40%. By far my biggest loser in my portfolio. Well, I won't spoil it. I don't want to get too much into my portfolio yet. High Tech here says, hey, Ryan. Hey, man, what's going on? Good to have you in here. Chris picked up some QYLD, Walgreens, Intel, Walmart. Seeing a lot of Intel purchases this week, and rightfully so. It's definitely at a discount, so definitely buying the dip. Deb picked up some Merck. Good purchase there. Johnny, good for you, man. Picked up my first share of Microsoft. Eventually got it at my price. Good. That's good to hear. I'm still waiting for Apple to get to my price. It's heading down. Suzuki Man actually told me, we were DMing on Instagram, told me today that Apple dipped into the 140s, which is great. Headed in the right direction. We'll see if it can keep heading south. And if it does, guys, I'll surely be picking some up. Caleb picked up some Home Depot, some Google, and HP, good job. Quint picked up a lot of AT&T, Altria, and Verizon, some high yielders. Good for you, my friend. Good for you. So, okay, one more, guys. So Jake from State Farm, some ARCC, MPW, HBAN, and Ben. Good pickups. Okay, guys, without further ado, how about we get into the main topic, guys? So, no. This is why I have to have my notes in front of me, because then I get ahead of myself. Guys, join the Discord. I'm just going to say that right now. Join the Discord. I just wanted to plug the Discord real quick. That's where Kevin, the screenshot we saw earlier, that's how I found out about Kevin's dividend income. And that's all we're doing in the Discord, really, is sharing our portfolios, sharing our dividend income, even sharing our purchases, much like we're doing right now in the live chat. All of that is happening in the Discord every single day, 24/7. At this point, I'm pretty convinced there's some of you guys in the Discord group who just don't sleep and eat, not sleep, eat, drink, and breathe dividend stocks. And it definitely shows in the Discord. So if you guys want to stay in tune with what's going on the market as it pertains to dividend stocks and what's going on with other investors, hit up the Discord. There's a link in the description to check that out. So now, guys, with that, let's just get into the main event, okay? Let's talk about all this crazy dividend stock news going on. So I'm going to pull this back up on the screen. The first piece of news and the first company we're going to talk about is one of my favorites. That's going to be StarBucks, who earlier this week had their investor day, their much anticipated investor day, and there were some really solid highlights that came out of that. And, you know, despite what you not despite what you think about StarBucks, but that's kind of what these are for. Like, these are kind of like hype sessions, you know, just to kind of promote the stock a little bit, get shareholders and investors motivated to probably pick up some more, and just to ensure them that the company's going in the right direction. And it seems like, you know, there's some really good things ahead. We'll see how it plays out. But some of the highlights that came out of this Investor Day presentation, which was seriously long, it was like a 5-hour presentation. I watched it all. But the first thing is StarBucks is expecting some pretty substantial growth over the next few years. From 2023 to 2025, they're expecting an adjusted earnings per share growth of 15 to 20%. Okay, I think that's the CAGR. So 15 to 20% every single year. So 2023, 2024, 2025, that level of growth. And annual comparable sales growth of 7 to 9%, which is definitely not nothing. Okay, that's same store sales. So they're expecting in the same stores that are currently existing, an increased level of revenue coming in and more foot traffic for sure, which is fantastic. And that should attribute to a global revenue growth all across the board, comparable sales and sales from new stores of 10 to 12%. So the low double digits. So that's really nice. And now as it pertains to China, which has been a hot topic for this company, and China's been kind of shut down for the time being, which is cut into their sales. But they're kind of coming out of that. And StarBucks is expecting China's comp sales to grow 4 to 6% annually over the next few years, 2023 to 2025. That's that same timeline. And they're planning to open up a lot more stores in China as well, growing about 13% of their presence there. And actually, kind of a sidebar to that, guys, Howard Schultz couldn't say enough, and I know he said this before, and we've talked about it. At some point in the future, he's expecting the market in China to outgrow the market here in the United States. He's really bullish on what StarBucks is going to be doing in China. We'll see if it plays out, but that is something worth mentioning, I think. So going back over here. Now, as for capital returns, this is really cool. So you guys might remember when Howard Schultz first came back and took the helm back, he paused the share buybacks. He paused the share buybacks and wanted to reinvest that more into the company, into the partners, which is their name for the employees, which they did. They've invested, I think, a couple $2 billion back into making the employees happy. But they have begun to reinitiate the share repurchases, and between the share repurchases and dividends, they're expecting to return about $20 billion to shareholders over the next few years. Now, to what extent they're going to be to what percentage of that is going to go to share buybacks, I'm not exactly sure, but between buybacks and dividends, they're going to be spending $20 billion over the next 3 years for those couple of things. So one other thing worth mentioning too, and this is actually, I think, kind of a big deal, is not only are they planning to add new stores here in the United States and obviously China, but they're going to be spending a lot of money to upgrade existing cafes with new equipment and new technology, which is expected to significantly help the prep of cold drinks. And they demonstrated this in the Investor Day, and I think that this new system is called something like Cypher or there's a name that starts with an S. It's not Sonia. I don't remember it off the top of my head, and I apologize for that. But basically what this does, guys, it was really cool. They demonstrated it for cold drinks, like a Frappuccino they made, and they demonstrated it for hot foods, like egg bites. And what it did, so for the cold drink, for the Frappuccino they made, on average, it takes maybe 85 seconds for the baristas to make Frappuccino. So this new system that they're implementing with the technology, it's going to cut that time from 85 seconds to make that one drink down to something like 30 seconds. Okay, so they're saving almost 1 minute per drink just by changing how the employees are putting together the drinks. And it's not like the robot is completely taking over either. It's still pretty manually operated by a human individual. The difference is, instead of having to bend over, reach into the fridge, grab the ice, dump the ice, put the ice back, okay, go back and do other things, then come back to the fridge, grab the whipped cream, put it on there. It's all completely automated. It is so cool, and I'm sure you could find it on YouTube to see the demonstration if you wanted to do so. But that's going to be a huge time saver. That's going to help them get people in and out. And you guys know, excuse me, you guys know with those lines at Starbucks, sometimes they can get pretty long. Hopefully this should help reduce that and eradicate some of the long lines and get people moving through a little bit faster, which hopefully should add more sales little by little. We'll see what happens, but I thought that was a really cool thing. Now going back over here, oh, you know what too, actually, one other thing I wanted to mention on this note, this was something that they were really honing in on. Now Starbucks is known for, or one of the things that they wanted to accomplish, like part of Starbucks' mission, was to make the cafe like the third place, is what they call it. You've got home, you've got work, and you've got this third place. And their intent was for that to be Starbucks, where people could go between home and work. They could go to the Starbucks, they could grab a coffee, and they can just connect over a cup of coffee. Really, when you get to the root of it, that is Starbucks' mission, connecting over a cup of coffee. And so their intent was to make their cafes the hub to do so. But as time has gone on, people, especially with the pandemic, 2020 to now, people are not wanting to go into the stores and sit and work and hang out at the Starbucks cafes as much. There's just not much of a demand. The way that the consumers are buying and spending time with Starbucks is changing. It's becoming more so drive-through. And there was something like, I'm not going to get this quite right, but today, guys, there's something like low 90% of Starbucks locations, at least here in the United States, are cafes. So they've got the drive-through, but they've also got indoor seating. Moving forward over the next few years, maybe in the same timeline that we saw to 2025 or maybe even beyond that, they're hoping to convert some of those in a lot of the new stores that will be coming in from having the cafe, having the seating, to just being drive-through. And so over time, it's slowly, as the consumer, how they're spending their money at Starbucks changes and the time they're spending their changes, they're going to prioritize drive-thrus a bit more. And even delivery, that was something they're hoping to prioritize more as well. And I think this is probably a good move, especially with companies like Dutch Bros, ticker symbol BROS, just coming onto the scene, just going public sometime earlier this year. And I don't know how many of you guys are familiar with Dutch Bros, but Dutch Bros, they don't have any cafes. They are strictly drive-through. And they're little shacks too. Actually, by my apartment, they're actually building one right across the street. And as much as I love Starbucks, I also really like Dutch Bros. But as a Starbucks investor, I'm glad to see this move because it's necessary, right? If people aren't spending time in the cafes, what's the need for that extra space? What's the need to have all the chairs and the seating and the furniture? Sure, there's going to be some demand in some places depending on the location, but not every single one. And so, especially the ones that are like right off the freeway, right? And so they're going to be spending some money over the next few years to convert some of the stores, and a lot of the new stores are just going to be drive-through only. And I think that will help them keep up with the new kid on the block, which is Dutch Bros. So anyway, that's what happened with Starbucks. There was a lot more that came out of that Investor Day presentation. I highly recommend you guys to either check out that presentation or head to Seeking Alpha and check out the article or the articles on the subject, which is where I'm pulling this info from. Or even, guys, my good buddy Russ over at Dapper Dividends today just put out a video going through the entire presentation. He basically took that whole 5 hours and chopped it down into 20% of that, gave you everything you need to know. A lot of cool stuff. So if you want to learn more about Starbucks' Investor Day presentation, go check that video out. Okay, let me take a sip real quick, guys, and we'll move on to the next stock. Next piece of news, I should say. Let's go back over here. So The next thing we're going to be talking about is Johnson & Johnson, a dividend king who just announced today, I believe. No, 2 days ago, excuse me. Just announced a $5 billion share buyback program, which is fantastic. And a little bit more on this. The CEO said, with our strong cash flow and lowest level of net debt in 5 years, we have the ability to invest in innovation, grow our dividend, execute strategic acquisitions, and take this action to deliver shareholder returns and drive long-term growth. And as a shareholder, guys, I gotta say, like, that's great to hear. And then furthermore, going back here, they added that they don't expect to take on any debt to fund the share buyback program, which is important. They're not gonna buy back shares with debt. They're gonna keep that balance sheet looking strong. And if we go over here, let's go over to Seeking Alpha real quick, guys. Head over to Johnson & Johnson and see what's been going on with the share buyback so far. We're gonna head over to the financials page right here. We're gonna scroll down all the way to the bottom of the income statement, and we can see the shares outstanding right here. It's slowly but surely been going down over the last 10 years, guys. So basically from 2018, we'll go back 4 years. 2018, they had 2.73 billion shares outstanding compared to today, or the trailing 12 months, they have 2.67 billion shares outstanding. So they're still slowly but surely buying back those shares. And I'm glad to see them continuing to do so, creating more shareholder value and, doing the opposite of diluting the shareholders. So for those of you who don't know how these share buybacks work, when a company buys back shares, number one, it's better if they do so when the share price is cheap, which actually, let's see what's been going on with Johnson & Johnson's share price. Year to date, down 2.3%, so nothing too crazy. Okay, in the last month, they're up a little bit. In the week, they're up 1%. Last 6 months, they're down about 4%. So it's not down a substantial amount, right? Maybe down a little bit. But anyway, guys, going back to the main point, what happens with these share buybacks is when companies decide to buy back shares, they're basically taking these shares out of circulation. They're retaining the ownership of the shares, or taking back the ownership of those shares, which increases your ownership of the company, increases your ownership percentage of Johnson & Johnson. If there's less shares out there in circulation, your ownership becomes a larger percentage of the company as a whole, which is great for you. And it's also great for the company because, especially in terms of the dividend, it means that if they're buying back a couple, 100 million shares, well, and then maybe they're paying, I'm just using a hypothetical example, maybe they're paying $1 per year per share. Okay, let's do this. Let's say that they buy back 200 million shares. We'll just say that, guys. 200 million shares. Every year they're paying $1 per share in dividends. That's $200 million they're saving every single year on dividends that they get to retain and do whatever they want to help continue growing the business. So it makes it easier for the company to continue paying and growing the dividend, number one. But also, number two, they don't have to pay out as much to the dividend, so they can retain those earnings, put them elsewhere, make more acquisitions, which is something they said that they were planning on doing. And just continued growth of the business. So really, it's a win-win. So it's really good to see Johnson & Johnson, who has a really impressive dividend track record anyway, make this move. And if we go back over here, speaking of their dividend, guys, they are a dividend king. So they have 59 years of consecutive dividend growth, and they're one of those stalwart companies. They've been around for a long time. Johnson & Johnson's one of those companies. They're not going to experience super quick growth, super substantial growth in the short term, okay? And the same thing is true with the dividend, but over a long period of time, you can bet your bottom dollar that, well, I shouldn't guarantee anything, but you could be pretty certain that the dividend's going to be around, okay? Especially with a payout ratio like this, which is only 43%, definitely on the lower side. So there's so many things here that indicate that Johnson & Johnson's dividend is secure and going to continue growing. And I think the share buyback program that they just announced definitely adds to that a little bit more. So that's what's going on with Johnson & Johnson. Let's move over to the third stock now, guys. Going here, we're going to jump over to Texas Instruments, who also, guys, announced, well, they also announced a share buyback program, which we'll talk about in a second. But first and foremost, they raised their dividend by 8%. So nice jump in the dividend for Texas Instruments, which is a pretty high growth dividend stock as it is. But to sweeten the deal, which I kind of jumped the gun on, to sweeten the deal, they authorized a $15, goodness gracious, see guys, this is what happens when I go live. This is why I record videos, because I just trip over my words the whole time. My brain moves like a million miles per hour faster than my mouth. But they just authorized a $15 billion share buyback program. And this is in addition to their previously announced $8.2 billion share buyback program. So that brings us to, what is that, $23.2 billion of share buybacks. And if we go over to Seeking Alpha, guys, let's go over to Texas Instruments right here and see what that, head over the income statement and see what the share buybacks are looking like, that chart there. I bet it's going to be pretty steep drop off. Yeah, look at this. Pretty nice. Going down, very steady. You can actually see it a little bit better right here. That slope is pretty decent, guys. Okay, and then in the last, let's say 10 years, $1.1 billion shares outstanding to 934 million. So that's a pretty substantial amount of shares that have been bought back. Okay, and then for every, let's go to the dividend page. So every year they're paying $1.15 per share. So $1.15. I'm going to crunch some numbers real quick. $1.15 times 200 million. Oops, I did that wrong. 1.15 times 200 million. So every year they're saving about $230 million. Gotta love that. And as you guys can see, they're a pretty dang high growth dividend paying company. Their 5-year growth rate is 18%. 18% is pretty hefty. And while this recent dividend raise is not as high as this, an 8% dividend raise is nothing to turn your nose up at, guys. And that, to go along with that, they have 16 years of consecutive growth, which is probably 17 now after this. But look at this. So if we go over to the dividend history, zooming out here, that's a pretty steep slope upward. I'm very happy with that. And, you know, we didn't really go into the financials for Texas Instruments, but it's a pretty solid looking company. As far as like semiconductors, if you don't want to go with Intel, you're not feeling comfortable there, I think Texas Instruments is a pretty solid alternative. Now, going back over here, let's jump over to the next company, guys. The next piece of news is coming from STOR Capital, and this is probably the most anticipated piece of news you guys came to see. Yesterday, they just announced that they will be going private in a $14 billion all-cash deal with GIC and Oak Street. Now, what this means, it means a few things. Number one, for shareholders of STOR Capital, you'll receive $32.25 per share in cash paid to your brokerage account, representing a whopping 20.4% premium on the stock's closing price as of yesterday. So you're automatically getting a really solid return from STOR Capital just from this news. And I think I had one more slide from this. Nope, I didn't. We're going on to 3M next. So let's stick with this for a second. So I want to go over to Seeking Alpha again and take a look at STOR Capital, because I'm honestly not too familiar with what's been going on with the share price. But I will imagine if we go here, look at this. So this is after they announced the privatization, that they're going private. Pretty unreal, pretty big jump, guys. And then this means in the last 5 days, they're up about 14%. So congratulations to all you STOR Capital shareholders. Now, one question that I know has arisen from this news is what's going to happen with the dividend. Excuse me, because I know that they're about to pay their Q3 dividend coming up here pretty soon. And I know some investors have questions about what's going on there. And it's pretty simple. It's pretty straightforward. That's going to stay intact. You're still going to be getting that dividend. From what I read, and I could be wrong here, I don't think this deal is supposed to close until, I didn't think it was till maybe the end of the year sometime. Maybe if we go back over to, I'm going to go back over to Seeking Alpha, maybe it'll give us some more information here. I thought I saw it. Okay, so yeah, so it's supposed to close in the first quarter of 2023. So there's still a few months, and as it says right here, no change has been made to the third quarter dividend. So all of you shareholders, you'll still be getting the upcoming dividend, but I would expect that to be the last dividend you receive from STOR Capital before it goes private. But hey, you're getting a pretty nice share price return. Can't complain about that. Little trade-off there. And actually, for those of you, I wanted to ask, for those of you who are STOR Capital shareholders, what's your plan? You're going to be getting a pretty good chunk of change from this deal. What is your plan with those funds? Have you thought about that? Do you have any ideas where you might want to reallocate those funds, or is it too soon to tell because that deal is going to be closing in 2023, so we still have another 3-4 months before that happens? But if you have any ideas on that, I'd be curious to hear about it in the live chat or in the comments below. Now let's go back over to the screen. This is the last piece of news we're talking about, guys, and that's going to be just the most heartbreaking stock of the year. 3M, guys. 3M is seeing another pretty cruddy day in court where they lost a request for immunity defense for the Forever Chemical cases, which is different than the earplug lawsuit that's been going on. This Forever Chemical thing is a whole different thing. And basically, we'll go through it real quick. But a federal judge in South Carolina today actually denied 3M's request for immunity defense in cases pertaining to so-called forever chemicals. And we'll get into what those are in just a moment. The decision may mean that these cases will have to go before a jury to decide if they're actually immune. So they might have to go to trial to see if they can receive immunity from these claims. And we'll get to what the claims are in just a second, and maybe why they could be entitled to immunity. But regarding the forever chemicals, guys, these are different things that they put in their products that they made, like Teflon, and I don't remember one of the other ones. But what they do when they get in the water, when they get let into the environment or released into the environment, however which way they do, they don't really break down. Okay, they just kind of remain for a long period of time, hence the name forever chemicals. And it's supposedly not good for the environment. It is not good for our bodies. They could be cancer-causing chemicals. And they use these chemicals in different products that they make in firefighting foams to help put out fires. Also used it at airports and military bases throughout the country. Now, what exactly is going on here and what the dispute is that 3M is claiming that they should be immune because they are a government contractor. And because they're a government contractor, they should not be, I guess, held liable for these forever chemicals. I guess they don't want to have the blame placed on them for products that they were making for the government, if that makes sense. And so that's why they're claiming immunity. The judge is not having it in the same way the judge is not having it in the earplug case. And I think it's a very similar situation because the earplug case, it's still a government issued thing. It's still a government contract that they have to make these earplugs for the US military. It's the same thing, I guess, with these forever chemicals. And guys, I call 3M the most heartbreaking stock of the year because let's just go take a look, guys, at the share price. What's going on with 3M? It sucks. It really does suck. And I'm a 3M shareholder. It is what it is. But it's not looking good for 3M right now. Year to date, this puts them down about 34.4%. And just in the last month, guys, a lot of those losses, over half of those year-to-date losses are coming just in the last 30 days, where they're down 22.25%. And then you guys aren't even going to believe this. In the last week, they're down over 7%. So look at these incredibly substantial drops from 3M. And if we zoom out a little bit, at their peak, and like I know when I first started buying into 3M, like right or probably, well, I don't know exactly when it was. Maybe somewhere in 2020, maybe around here, I started buying, definitely higher than it's at today. And at their peak, at their recent peak, they got just over $200 per share. This is kind of where I remember them hovering at for a while. And then things just started to really head south, and they've dropped almost $100 per share from their peak. And I don't think it would surprise anyone at this point if 3M dropped down below $100 per share, which at that point I would imagine would put them in the single-digit PE ratio range, which I don't know. Like I actually don't really know what to make of all this, and I don't really know what the end result is going to be. I think it's going to take some time to really see a light at the end of this tunnel. It's unfortunate that they're kind of getting hit from both directions at once. And I see both sides. I can see why one might want to buy into this. I can see why people might not want to buy into this. There's definitely some risk attached to 3M right now, which number one is why we're seeing the share price plummeting so much. But number two, with that is why we're seeing this yield push up so much, officially in the 5% range, guys. Super high yield for 3M, which is a dividend king with 63 years of consecutive 63 years of consecutive dividend growth, which might be one reason someone would be inclined to pick this up. You might look at this and say, look, this is a huge industrial conglomerate. Companies like this are, litigation just comes with the territory, and it's not 3M's first. It won't be their last. So I'm buying at these cheap prices. But then on the other hand, like I said, there's other investors who are like, I'm staying away. I'm staying out of it. I might even be selling 3M because I don't like the risk attached to this. It could result in bankruptcy. It could result in them cutting the dividend, eliminating the dividend, which would not be good, right? And I don't know. 3M is such a toss-up. 3M is such a toss-up for me right now. It's such a gamble. And, I'd be curious to hear you guys' thoughts on it in the live chat. I know there's going to be a mixed sentiment regarding 3M, and rightfully so. But, having a fresh set of eyes, fresh opinion from all of you guys in the live chat, I think it's going to be helpful, not only for me, but for the rest of us watching this stream. And same to you guys watching the replay. Let us know your thoughts on 3M in the comments below. Now, taking a look at my notes, I think those are the only those were the last, yeah, that was the last stock I really wanted to talk about. And as you guys know, we've been throughout this entire video and throughout a lot of my videos, we're using Seeking Alpha to find all of this information, to go through all of these articles and also look at all of these stocks. And the interesting thing about Seeking Alpha is, especially at least with the articles, if you don't pay for premium, unfortunately, you get access to only 5 free articles per month, which we blew through in the last 35 minutes. Okay, all your month's worth of free articles gone in 35 minutes. Okay. Premium, guys, I've been using 3M. I've been using Seeking Alpha Premium for months now, and I really love it. And right now they have a crazy deal going on where you can get it for $8.25 per month, $8.25, where normally it's like $20-$30 per month. So huge deal. And if you guys would be interested in checking out Seeking Alpha Premium, which comes with a ton of other really great features, there's a link in the description. Not only do you get that discount, but you get a 7-day free trial. No risk. So if you've ever been interested in trying the premium version, no excuse not to, really. You get that 7-day free trial. You can cancel beforehand. They won't charge you. So I highly recommend it. Now with that, guys, I want to switch gears and get into the portfolio update, just show you guys what's been going on in my portfolio. And then from there, we'll get into the Q&A. But going over to the screen real quick, let's jump over to my spreadsheet here. So let's see. You guys can see that? Okay, yeah, that looks pretty good. So right now, guys, my portfolio is sitting at $37,747, basically. Let's just round up. And I don't remember exactly where this portfolio was at last week, but I know it was higher than where it's at today. So I've definitely lost some money in the last week. And furthermore, guys, the losses that I've incurred in the last week have officially put me overall in the red with this portfolio, which is not great. I gotta say, not too great. But it is bittersweet. And if we go over to the positions page real quick, just so you guys can see where most of these losses are coming from. Okay, I'm down 37% with Intel. Well, let me do this. Down 37% with Intel. We're looking at this column right here, guys. I'm down almost 12% with JEPI, which kind of sucks. I know that's not typically known for its appreciation, so I hope I recoup some of those unrealized losses. Okay, I'm down nearly 30% with 3M. I'm down 12% with ORCC, which I might consider averaging down on a little bit. I'm down 20.5% with AT&T. No surprise there. I've been down for a long time with that company. I'm also down 21.5% with Verizon and then 20% with XYLD. So I'm definitely seeing some red here in this portfolio, which is very bittersweet. And none of these positions, I will say, with maybe Intel being an exception and possibly ORCC, like I mentioned, I don't really plan to average down on any of these other ones at this time. Maybe Verizon is a third. I could nibble away a little bit at Verizon, but the rest of them, guys, 3M, I'm waiting to see more light at the end of the tunnel. JEPI, don't really plan to average down on that. XYLD, don't really plan to buy more of that. AT&T, I've got enough of that for now, so I'm kind of chilling on that. But yeah, it's just not been a good week in this portfolio. But what I did buy, I guess it did create some good buying opportunity. And if we go over here, switch gears, let's jump over here. I picked up 3 different companies this week, 3 different stocks. I put a little bit of money into KRC, about $100 invested there, picked up 2 shares of KRC. I put $90 into Intel. I got 3 shares of Intel. So I guess I did average down a little bit with Intel. And then the remaining funds that I had left over in my brokerage account, I put that into Lowe's. So an even $40 into Lowe's and got, I guess a fifth of a share of Lowe's. So I guess it was a pretty good week of purchases for me. I'm going to continue building out my KRC position. I think I'm up to, if we go back over here, go back over the spreadsheet. I'm officially up to, what is it, guys? 10 shares of KRC. And how much do I have right now? I've got, what's my cost basis? $500. So about $500 invested into KRC. I'm going to continue building out this position at least till I have, I would say, about $1,000 invested in it, which should put me at about 2.5% total allocation. Also disregard the sector things here going on. And there must be some sort of issue with the spreadsheet that I need to go in and tweak. So for those of you who are using this spreadsheet and have noticed that as well, I'll get to work on fixing that. But anyway, guys, that's what's been going on in my portfolio. And it looks like I bought some of the same stocks as you guys. I saw some lows earlier in the stream when we were going through the purchases. I saw some Intel as well. A lot of Intel, you guys picking up Intel. So looks like we picked up some similar stocks this week. Let me take a sip real quick. Now, next, guys, I do have some news for you. Some good news, some bad news. And we'll start with the good news. So the good news, and you guys have heard me talk about this before, but I'm officially moving to Las Vegas. It's a done deal. Done deal, guys. And I'm actually moving next week. 1 week from today, I will be probably at this time, like exactly 1 week from today at 5:40 p.m. Pacific time, Friday the 23rd, I will probably just be arriving into Las Vegas in a U-Haul with 2 other cars and all my stuff, and Peanut will be there too. I don't know where he's at right now. He's probably packing. But yeah, guys, it's officially happening next Friday. It's pretty unreal. That's the good news. I'm super, super excited. It's going to be quite an adventure, I will say. So that's the good news. The bad news is it means that there will not be a Dividend Happy Hour next week. And I'll put out a community post next week just as a reminder, but I will not be around to do the live stream next week, and I so apologize for that. But we'll make up for it in the following week in the new spot. And I'll be so stoked to show you guys because I'll actually have like a whole, I won't be sitting at my dining room table anymore. I'll be at like in an office. I'll have a whole room dedicated just for all this film in and work stuff. And so I don't exactly know what that's going to look like, but it's definitely a better setup than what we're rocking with here. And that's pretty much all I got for you. So I think now what we're going to do, guys, we have about 20 minutes left in the stream. I want to go through and just read some of your guys' comments and catch up with you guys and, you know, see what we can put on the screen. Maybe go through some stocks, answer some of your guys' questions, and have a little fun. And so let's see. It might take me a moment just to pull something up on the screen. And I'm not going to shove it down your throats, guys, but seriously, with Seeking Alpha Premium, I can't recommend it enough. Like, even just try the trial. I think you guys will be amazed at how much you use it and how actually worthwhile it is. I don't know about you guys, but I personally am on the website. I probably go to the Seeking Alpha, I would guess between 20 and 30 different times per day. And it's to read articles, it's to see stocks, it's to do all the things, and it's totally worth it. So like I said, I'm not going to shove it down your throats too much, but I highly recommend you guys check out the link in the description and try that trial at least. And also, you know, I probably should mention this as a disclaimer. I do get like a little commish from those of you who sign up for the trial, so it would help your boy out too. But anyway, guys. Oh, Johnny here. So going back to Starbucks earlier, I mentioned Russ's video. Johnny actually watched it and said it was really good. Dennis said the same thing. So good. I'm glad you guys actually watched it. Let's see. Oh, Mountain High here says Margarita Money Club. So for those of you not in the loop, not in the Discord, currently the name of the Discord is the Dividenders Discord group. And when I first made the Discord server, I don't know when it was, maybe a year or so ago at this point, I use that name as just kind of a placeholder, and I really want to change it. I really want to come up with something different. And yesterday in the group, I threw out a suggestion or some suggestions, and I'm going to be changing the name of the Discord group here soon. I initially wanted to call it the Margarita Money Club for obvious reasons. You guys know me and my margaritas. But Jake from State Farm, if he's still here, actually recommended a really solid name for the group. It's called, the name is the Drip and Sip Discord group, which I think is pretty dang cool. So Drip, obviously like dividend reinvestment drip program, Drip and Sip. So we'll see what I end up changing the name to. I think it's probably going to be between one of those two, but yeah. So with that too, if you guys want to join the Discord, the link's in the description. Totally free to join. All you need to do is click the link. It'll take you right there. Let's see. Let me put something on. Oh, yeah. So I was going to mention this with Starbucks, and I totally forgot when I was talking about that. Jim says, Howard Schultz told Jim Cramer that a new Starbucks opens every 9 hours. That's impressive. Yeah, I saw that in the presentation. That's crazy. Crazy. A new Starbucks opens around the world every 9 hours, guys. That's pretty wild. And I will say, too, I didn't really touch on the new CEO coming in, Luxman. Seems like a really decent guy, and I think him and Howard Schultz are going to be on the same page, and he's going to be doing, for those of you who don't know, like a 6-month, I guess, shadowing sort of thing with Howard, just to make sure he gets all his T's crossed and his I's dotted and he gets the vision. And I think that's a good move. And, I'm looking forward to seeing what happens with StarBucks moving forward. Excuse me. All right, let's keep going. I need to hustle on these comments too, guys, because I'm seriously 25 minutes behind. So I apologize if I skip some of your guys' comments, but we got a lot of them to get through tonight. Let's see. And also, thank you guys. For those of you who are still here, there's about 110 people in the stream right now. Guys, thank you so much for tuning into this stream and hanging out with me tonight. It's so cool that we get to do this every week, and it's so cool to see all of you guys, the usual suspects, coming back for all of these. I really enjoyed this time together. Let's see. Cash here has a good point with Intel. Patience is a virtue, got to hold. That's the thing, and I always say this about Intel. Whenever I talk about it, if you're going to be buying Intel, if you're going to start a position with Intel, which right now seems a really solid time to do it, and it might continue heading south in the short term, so be aware of that. But if you're going to buy Intel, you got to realize it's going to take a matter of years to play out. Like Cass said, you got to have some patience. You got to buy it today, knowing that it might be until 2025 or later before things really start to come to fruition, if they even do, right? Because it's the roll of a dice. So I don't know, but that's definitely something to consider as you're looking at Intel, buying more or starting a position. So, let's see. I see a lot of you guys talking about STOR Capital. Mountain High says, bye-bye, 3M. Bye-bye. We'll see you later. Mountain High is not having it. Not having it. Where, on the other hand, Chris here says, I can't wait to buy more 3M. So, hey, maybe you guys should get together. Mountain High, maybe you and Chris should make a deal. It sounds like he's ready to take over your shares, man. Billy, same thing. Just give them to Chris. Billy sold 95% of his 3M. Cass, same thing. Sold. Out of here. A lot of you guys sold 3M. Wow. See, here's what I think about 3M. I'm going to go back and look at my spreadsheet. I have, at this point, guys, my cost basis for 3M is, well, higher than I thought. It's about $2,000, which is actually a pretty sizable portion in my, near $40,000 portfolio. Let's say it goes to zero. Which I don't think it will, but let's say even 3M goes to zero. When I think about it, for me, I'm like, okay, worst case scenario, and I plan to hold 3M, but worst case scenario, I'm out $2,000. That's in the grand scheme of things, across a long period of time, it's not gonna crush me. And some point down the road, the $2,000 today, if it went to zero, it's at some point in the future, that's a week of dividends for Kevin Burgess. So, we'll be all right still. It's okay. But at the same time, I'm not making too much of an effort to increase my position right now until I guess know a little bit more about it. And that's one other thing too. I've said this before, I'll say it again, and I'll probably say it a handful more times as we go through this with 3M. But one of the reasons I'm holding and really just being inactive with this stock is because I'm only 2 years into this investing stuff, serious investing. I've never gone through anything like this before, and I don't know how best to proceed. And so, because I'm not too experienced with this sort of thing, I think nothing is better than doing anything. And I guess while I'm doing nothing, I'm still getting paid. So I'm happy there, if that makes sense. And this is kind of an interesting point too. 3M almost has a dividend yield of a sin stock. Yeah, that's actually a kind of a good way to put it. It's getting, well, maybe not so much a sin stock. Well, yeah, actually, yeah, because Philip Morris has a dividend yield of like last time I looked, it was 5.13%, something along those lines. But another example, it's catching up with the likes of like AT&T and Verizon, right? So that's pretty crazy. And it's especially for industrials, like that yield is so much higher than any industrial stock I can think of. That's pretty unreal. And furthermore, that's really high for a dividend king. The only other dividend king I can think of that has a yield that's, that high or a high yield is Altria Group. Is something in the 9%. Is Altria Group in the 9% still? So, that's pretty impressive. But, the high yield, high risk, high reward. So I guess that's what they say, right? Oh, Chris Haynes. The legendary Chris Haynes, Superman himself. They have $1 billion plus litigation that may increase, so only if wanting to hold over 5 years. Yeah, I guess when in doubt, do nothing. That's kind of my approach to 3M. And Chris, I don't know if you're still in the stream, man, but I'm really glad to see you in here. I'm glad to see you in here, man. Let's see here. Yeah, okay. This is a good point too. Like Jake says, to me, there's thousands of other stocks I can look through, so I'm okay with missing out on 3M. I agree. I do agree with that. There's so many other great stocks out there, and I actually recently did a video talking exactly about this for 2 alternatives to 3M for those who, maybe wanted something somewhat similar or in the same department, but not 3M. And the 2 examples I used were Snap-on, which is in the industrial sector, high growth dividend stock. The yield is definitely not comparable to what we're seeing with 3M. Snap-on, super high growth dividend stock. Love me some Snap-on. Definitely going to be buying more Snap-on. The other alternative that I provided was Lowe's, not in the industrial sector, but fantastic stock, another dividend king, another high growth dividend king. So I think those would make for 2 really good alternatives if you're not super interested in investing in 3M. So, and this is another great point. Kevin actually, I've heard Kevin say this, or I've read Kevin typing this a few different times. 3M does not have control over its future. It's too risky for me. And that's a great point. The fate of 3M is in the hands of the courts. And this is to compare it to another stock in some hot water, going through some turbulation, Intel. When Kevin was talking about it, comparing 3M situation to Intel has a lot more control over their situation. The headwinds that 3M is facing are different than those of 3M. And I guess long story short, like I said, 3M it's up to the courts what's going to happen. And that's not, that's not a good place to be in, not a good spot to be in for the company or for its investors. So, Chris, another good comment. It's buy season. We are at one of the greatest points in history if you intend on staying in the market. Only risk what you can and your future will be bright. Well said, my friend. Well said. And I think too, like to Chris's point, like things are going to continue going down, at least in the short term. And if we go back over to the screen, let's jump back over to Seeking Alpha. Let's take a look at the charts. So just the broad market as a whole. Let's take a look at the Dow, the S&P, and the NASDAQ. So year to date, guys, the Dow Jones is down. What's it down now? 15, almost 16%. Okay, the S&P year to date down about 20%. So huge drop from the S&P so far. And then, oh man, the NASDAQ getting close to a 30% drop just in 2022. So to Chris's point, like, things are looking really good. It is buy season, guys. And I'm hoping that, and I'm sure a lot of you are as well, I'm hoping it continues. I'm hoping we see a lot more red. And I'm sure you guys are the same way. So let's see. Oh, and I'm at a point now, I'm about 15 minutes behind in the comments. You guys are saying congratulations for Vegas. So thank you guys so much for saying that. I'm super excited about it. And thank you guys for the well wishes. That's awesome. I'll definitely carry those with me as I make the move. To answer Charles's question, did I propose? No, I did not. No, I did not. We've been ring shopping though, so we're getting there. Thank you for asking. This is a great question. What's Peanut's favorite dividend stock? I don't know. Let's see. Knowing Peanut, probably Altria Group, because, bless his heart, he does have a bit of a problem with the cancer sticks, and it's something we've talked about But it's a tough habit to kick, especially for a little kitty cat like him, a little mischievous kitty cat. And he's his own man. He's doing what he wants. He's been watching a lot of he just has been watching a lot of East of Eden. He just has that movie on repeat, and big James Dean guy, and so he's been definitely indulging in the cigarettes. So yeah, probably Altria Group for Peanut. Let's see here. Okay, Kevin says in regards to Seeking Alpha, he's got a membership and it's well worth it. I use it a lot. Yeah, and there's a handful of really good platforms out there. Like Seeking Alpha is great. Simply Safe Dividends, I haven't used it, but from what I've seen, it looks awesome. I've kind of looked a little bit more into fast graphs lately, and I still need to get a grasp for fast graphs. That's kind of a tongue twister, but that seems like a really, really solid platform to use as well. And I know there's a handful of others, and there's more popping up every day too. But those might be like the big three, in my opinion, or in my mind. At some point, I'd like to branch out and use some of those other platforms, but I don't know. It's just extra money I could be putting elsewhere. So Cass, this is a really good question. Is the dividend free, or is the Discord free and safe? Yes. Discord is totally free, and it is definitely safe, with the exception of our friend Turtle, who's in the Discord. He gets a little bit mouthy sometimes. I don't think Turtle's in here. I wish he was, but I'm just messing around with Turtle. It's totally free. It's totally safe. Really, Cass, what it is, to explain it, it's just one big group chat, and I don't think I can put it up on the screen. Yeah, I don't think I can put it up on the screen, unfortunately, but it's just one big group chat, Cass, and basically all we're doing in there, it's just about 1,000 other dividend investors, and we're just talking dividend stocks all day, sharing stock research, talking about what's going on in the market, what's going on with individual dividend stocks, the market as a whole. People are sharing what they're buying and what they're selling. There's a whole channel just dedicated to buy and sell callouts. People are sharing their dividend income, how much income they're bringing in. That's how I found out about Kevin's dividend income that I showed earlier in the stream. He shared it in the Discord group. But really, Cass, like, when you get to the root of it, it's just dividend investors, kind of like we're doing here, just getting together and talking about dividend stocks. And us dividend investors, or really us investors in general, I don't know if you guys are the same way, but I don't have anyone that's interested in this stuff in my normal life, in my regular life. I don't physically know anyone, with the exception of my girlfriend who dabbles in some dividend stocks. No, I don't really have anyone who I can talk about this with in person. And so it's helpful to have communities like this here on YouTube and like the Discord to be able to just, share this hobby and share this great thing and talk about it with other people who get it. A lot of people don't get dividend stocks. It's so, it's so foreign to so many people. And I guess really that's what I'm trying to change. One of my motivations for starting this channel is to bring more awareness to this, because it can be life-changing. But that's pretty much what we're doing in the Discord cast. It's just talking dividend stocks. Anything you can think of related to dividend stocks, it's going on in the Discord group. And it's so cool. And it's such a great community of people, and I'm so thankful to have everyone in there. So let's see here. A couple more comments, guys, and we'll call it a night. Oh, Chris here says he's having the Ghost Sour Patch Blue Raspberry, and it is so good. Good, man. I'm glad to hear that. The one that I had was like the red Sour Patch Kids, and that one was delicious. But the blue one, I bet, is so good. For those of you who don't know, Chris is talking about basically like an energy drink from a supplement company that we both like, called Ghost. Chris Haynes, I know Chris knows Ghost. And Chris, actually, I have a question for you. Have you ever... I know you're a big fitness guy. Have you ever been to the Olympia or the Arnold Classic or anything like that? Let me know in the live chat if you've ever been anything like that. The Olympia, so for those of you who don't know, I'm about to nerd out on some bodybuilding stuff. And believe it or not, like I know I don't look it, but I'm super into like fitness and working out and stuff outside of what I do here on YouTube. But for those of you who don't know, the Olympia, the Mr. Olympia is basically like the Olympics for bodybuilding. And Arnold Schwarzenegger, Lou Ferrigno, Frank Zane, like all these guys. Well, I don't know if Frank Zane was actually Olympia, but Arnold Schwarzenegger is probably the name most of you would recognize. He was a 7-time Mr. Olympia. And so it's basically the highest award that you could win, the biggest trophy you can win in bodybuilding. every year they have the events, except for I think last year or maybe 2020 in Vegas, and they're having it this year in December, and I think it's December. I'm so stoked because I'm going to be living there, and I'd love to go. Chris Haynes and I, we actually went together once a few years ago. It was so much fun, and I'd love to go again. Anyway, sorry, enough bodybuilding stuff. You guys didn't come to hear that. Let's see. Oh, Charles got here late. What was the good news regarding Johnson & Johnson? Basically, Johnson & Johnson has initiated a share buyback program for like $5 billion or something along those lines. So yeah, pretty good stuff. Okay, maybe one more. Rashawn, you are the man. Ryan, you're still the GOAT, no cap. Oh, man, thank you so much. Rashawn, you're seriously the man. I appreciate you big time. Steven here, this is actually a really good question. So drip or no drip, pros and cons. Steven, fantastic question. So real quick, for those of you who don't know, drip stands for like dividend reinvestment program. And what it is, when you get dividends, when you get dividend payments, when drip is on, they're automatically reinvested into the same stock from whence they came. So if you get a Johnson & Johnson dividend, if you have drip turned on, it'll go right back and be reinvested to buy more shares of Johnson & Johnson. That's if you have it on. If you have it off, you just collect it in cash. You can manually reallocate those funds elsewhere. Now, the pros to having drip on, number one, it's easier. It's more automated. It's hands off. Okay, the dividends just go right back into the same stock that paid you, and that's good because number one, you don't have to do anything to make that happen. Number two, it's good because it allows you to continue to build out those positions, to continue to add size to your Johnson & Johnson or your Intel or whatever position where maybe, you're contributing money elsewhere manually. It still allows those positions to grow. So it's good in that regard. The con is that sometimes those stocks like a Procter & Gamble or a Johnson & Johnson or a Costco are not at a good value. So you're buying those shares, which is good, but in some cases you can be buying them expensively, or at an expensive price. Too high to buy. And so if it's turned off, you don't have that issue. When you can manually reallocate those funds elsewhere, you can ensure that you're, more effectively, you're more effective in buying deeper value stocks, if that makes sense. So that's probably the one con to having them off, or pro to having them off. I just recently, within the last couple months, turned drip off in my portfolio. My portfolio is now at a place where it's bringing in an average of over $100 a month, and I figured that was a sizable enough amount that it made sense to turn that off and reallocate that elsewhere. So that's my take on it. Let's do like one more comment, guys, and we'll call it a night here. Caleb says Ryan will know he's doing good with YouTube when scammers start coming. Dude, they've been coming, man. It's ridiculous. It's such a pain to keep up with too. Like I really try to go through, at least if like there's a new video, I really try and go through and report all of the bots that come in as spam. It's tough to keep up with though. But whatever. What are you going to do, guys? Hi, Ryan. Haven't been over here in a minute. It's good to see you, my friend. Glad to have you in the stream. So this is a good question. Hi, Ryan. Is your work taking you to Vegas, or are you starting a new business? No, not really either. Just I live in Sacramento, and my girlfriend and I, we've never really lived anywhere except for this area. And so we're in Vegas multiple times a year. Really love Las Vegas. There's so much to love about it. It's certainly cheaper than where we're currently living. And we knew we wanted to move out of California one way or another. And when thinking about where we wanted to go, we threw around some different options. Texas, Vegas. This is in California, but like Orange County, Newport Beach, which is another place that we love. But we ended up on Vegas. It just seemed to check more boxes than anywhere else. It was a place that we love. We knew we loved it. My girlfriend works in nightlife, which is obviously perfect for, Vegas is the perfect spot for that. It's cheaper, like I said. Like, to give you a comparison, we're currently renting a pretty nice one-bedroom place here in Sacramento. We're able to get a 2-bedroom, 2-bath in Vegas for about $300 less than what we're currently paying here in Sacramento. So in comparison, it's a lot cheaper. No state income tax. I do have an LLC as well. So I'm technically self-employed. And all of my YouTube stuff, I just run through that LLC. And that's one other perk to being in Nevada is that there's no state income tax on a personal level. But corporate-wise, it's also pretty advantageous tax-wise. So let's see. Christian here says, what part of Vegas are you moving to? So we're actually moving to Summerlin. Yeah, we're going to be moving to Summerlin. Nice little place out there. And I think we're going to rent for this first year just to make sure we like it and then maybe evaluate buying from there. So we'll see what happens, though. Okay, guys, I think this is about... Oh, Charles, is Phil Heath going to win the Olympia again? I don't know. I think Chris Haynes, if he's still in the chat, I think he's a better person to ask about that. Also, Chris Parciano... Parasano? Chris Parasano? Hopefully, I apologize if I got your last name wrong, but they might know more than I will on that. Yeah, I actually thought Phil was retired as well, but I don't know. No love for Ronnie Coleman, man. No, Ronnie Coleman. I've been seeing him pop up on the scene more lately. Seeing him collaborate with some other YouTubers. I saw him with this other guy, Jesse James West. I don't know if you guys know who that guy is. Like, I just stumbled upon that guy's videos because I saw he did a video with Jay Cutler, Jay Cutler's my all-time favorite bodybuilder. Love Jay Cutler. Have had the pleasure of meeting him probably 2 or 3 different times, and he's just a super nice guy. Love Jay Cutler. Let's see here. Rex said Ryan is a Raiders fan. I'm actually not. I'm really not a sports guy. Like, basketball doesn't do it for me. Football doesn't do it for me. Baseball definitely doesn't do it for me. I grew up, I was always interested in skateboarding. I was interested in snowboarding, surfing, those kind of sports. And yeah, and then as I got older, when I started lifting, I got a little bit more into bodybuilding, which is, whatever. Not everyone's cup of tea for sure. So anyway, guys, with that, it's 6:06. Oh, I do kind of like the UFC. I'd actually like to get a little bit more into the UFC. Isn't Jay Cutler a quarterback, former Bears? Yes, but Jay Cutler is also a bodybuilder. 4-time Mr. Olympia. Great dude. But yeah, I'd like to get a little bit more into UFC and start watching it some more. I do think it's pretty cool. So anyway, guys, I think this is a pretty good place to wrap it up. I meant to mention this earlier in the stream too, and I never do. But if you guys haven't done so already, please do me a favor, hit the thumbs up button on this stream, give this video a like, and also if you have not done so and want to see more stuff from me in the future, hit that subscribe button as well. We're doing these streams every single week with the exception of next week because I'm moving, but these streams are coming out every Friday, okay, same time, same place. Outside of that, I'm putting out 2 regular recorded videos, one on Wednesday, one on Sunday, so a lot of great content coming your way. It's all related to dividend stock investing, so definitely hit that subscribe button. And, once again, thank you guys all so much for being a part of the stream and joining me for another, hopefully, successful Dividend Happy Hour. It's always a pleasure hanging out with you guys, and this has just been a lot of fun as per usual. So with that, guys, I will now get out of your hair. Thank you once again so much for joining. I really appreciate all of you. I hope you all have a fantastic weekend. Stay safe out there, and I will see you on Sunday. Be sure to tune in Sunday at 8 a.m. Pacific time. I'll be releasing a video. Be sure to check it out. It's a really cool one, actually. Really cool video. I worked really hard on this one. I work hard on all of them. This one's a really cool one. So guys, definitely be sure to tune in Sunday. Drop me a comment on Sunday's video and say what's up. I want to see all of you guys there. But anyway, have a good weekend, and I'll see you guys soon. Take care.